Good afternoon and welcome to India Today. I'm Anjali Istawal. We begin this bulletin with breaking news coming in from the court. Now, the Delhi police, during the hearing of the Delhi riots case, has made a big charge. It has said that there is a big charge they've made, and they've said that these intellectuals are actually more dangerous than the terrorists. Cops said that they get degrees from state and turn to terror. Also, they are claiming that these intellectuals use state funds for terror. For more on this, I'm joined by Srishti Oja. Srishti, do tell us, what are these claims that the Delhi police is making against Sharjeel Iman and others who are accused in the Delhi riots case?
Well, yes, Anjali, as we know, since the beginning, Delhi police has maintained that the 2020 Delhi riots, where all these people, Sharjeel Imam, Umar Khalid and others are accused, was not a case of a simple, spontaneous protest, but rather it was a violent, well-planned, orchestrated protest. Now, today, during the hearing, while opposing the bail pleas of the accused, you've seen a big statement come from the Delhi police lawyer, the additional Solicitor General before the Supreme Court, who said that it's the intellectuals, when they become terrorists, they are much more dangerous than the ground level terrorists. The ASG also said that intellectuals use state funding to become doctors and then do nefarious activities, hence they're much more dangerous. It was said in context of several accused who are involved in this case. Not just that, we also saw the Delhi police claim that as far as the 2020 Delhi riots are concerned, these accused wanted to not hold a simple protest but economically strangle Delhi and Assam, and the nature of protest was such that they wanted to deprive people in Delhi of essentials, and they wanted to stop the supplies of essentials to Delhi. It was planned and it was synchronized with the visit of the US president, and that was in itself not a coincidence. According to Delhi police, the idea of the 2020 Delhi riots, the ultimate aim was regime change. Not just that, we saw an entire compilation of all the speeches, portions of several speeches made by Sharjeel Imam that, according to Delhi police, were inflammatory speeches, and the idea was, the goal was to instigate the Muslim population and somehow convince them to further their own cause. Referring to all those speeches which were played in open court before Supreme Court, the ASG said that the idea was to provoke the Muslims, and such inflammatory speeches were made. So it's very clear that these speeches were not made to conduct just a simple non-violent protest. The idea was that of a chakka jam. The idea was always of a violent protest. Now, the Delhi police will continue with its arguments again tomorrow before the Supreme Court. Back to you.
Right, Shrishti, important there that Delhi cops have said these things in the court, and also drawing a parallel with sort of, in a way, by calling it a white-collar crime, white-collar terrorism, sort of saying how educated intellectuals, if they are radicalized and they continue in this path, could become extremely dangerous. But do tell us what they say about, is this statement said about only Sharjeel Iman? Because there were other accused as well who had put in application for bail in front of the court.
The Delhi police had played videos of Sharjeel Imam's speeches in the first half of the hearing today. We saw the ASG refer to multiple accused and tell the court that most of the accused are involved in this case were intellectual. They were students, activists, doctors, engineers. And in the second half of the hearing, we saw this statement come in from the ASG saying that, in a general statement trying to explain his point to the court, he said that when intellectuals become terrorists, the cases where intellectuals beat engineers, doctors, when they decide to become terrorists, they become much more dangerous and much more harmful than the ground level terrorists, because these are intellectual people. They know how things work. They also try to instigate other people with their knowledge. Now, this statement in a way also becomes relevant in the backdrop of the ongoing probe into the Delhi bomb blast as well, because the ASG, who's appearing for the Delhi police here, has clearly said that intellectuals often use state funding. A lot of state money goes into their education to eventually become doctors, engineers, and then they do nefarious activities, and hence they become much more dangerous as compared to any other ground level terrorist. So all these statements, even though were made in context of the Delhi riots hearing, but extremely crucial statements as far as the probe into the Delhi riots case is concerned. This is what the Delhi police is basically trying to put forth as its stand while opposing the bail pleas of all these accused, Sharjeel Imam, Umar Khalid, Gulfisha Fatima, others who all approached the top court hoping for bail, because according to the Delhi police, which is the agency that has probed this case, they have several WhatsApp chats, several videos of speeches, instigating speeches which were made to instigate people to eventually ensure that the cause of CA&RC bill was, according to Delhi police, used incorrectly. They thought, according to them, the accused in the case thought that CA&RC would be a good topic, would be a good chance for them to instigate the Muslim population against the country. And the idea was not just to protest against CA&RC. The idea was to have a regime change operation is the big charge that the Delhi police has put against the accused in the Delhi riots case.
Right, Shrishti, these are very big claims that the Delhi police and the ASG has made in the court. He has even said that CAA protests were actually timed with the US President's visit to India to get international media coverage as well. So clearly we are seeing here that the court is currently listening to what the Delhi police and the ASG is saying. Thank you very much, Shrishti. And now we have news coming in from Karnataka. This is related to the Chief Minister face change. Now, DK Shivkumar's brother has given a big hint as far as CM face change is concerned. DK Suresh, who is DK Shivkumar's brother, he has said that Hope Siddaramaiah will keep his promise. So what is the promise he is talking about? DK Shivkumar is hinting at a 2.5 years rotational chief minister post is what most are speculating.
ಕರ್ನಾಟಕದ ಜನರ ಆಶೀರ್ವಾದದಿಂದ ಇವತ್ತು ಈ ರಾಜ್ಯದಲ್ಲಿ ಕಾಂಗ್ರೆಸ್ ಸರ್ಕಾರ ಬಂದಿದೆ. ಇವತ್ತಿಗೆ 2.5 ವರ್ಷ ತುಂಬಿದೆ. ನಾವು ಕೊಟ್ಟ ಮಾತಂತೆ ಮಾನ್ಯ ಮುಖ್ಯಮಂತ್ರಿಗಳು ಗ್ಯಾರಂಟಿಯನ್ನು ಅನುಷ್ಠಾನ ಮಾಡಿದ್ದಾರೆ. ಅವರೇನು ಮಾತು ಕೊಡ್ತಾರೆ ಆ ಮಾತಿನಂತೆ ನಡ್ಕೋತಾರೆ.
And now let's go across to Sakshi Batra of Business Today with all the market updates. Sakshi, over to you.
Good afternoon and welcome to the Market Closing Show. This is our collab show between Business Today and India Today Television. This is 3 p.m. and we are here to get you all the closing action. First up, let's take a look at what's hot in the corporate and the financial space. Nifty is just points away from the new record high levels. Foreign inflows in the last few days have given wind to the markets. Banks, autos, FMCG stocks have all powered the indices in the last couple of weeks. The weekly expiry of Sensex contracts also added action to the markets today. Two of the biggest and most hyped IPOs in recent times, Grow and PhysicsWallah, have turned into a nightmare for recent investors. PhysicsWallah's market value has tumbled from 46,300 crores on the listing day to 37,700 crores in just a few days. Grow also has slipped 16% from its highs just 2 days ago. IT and Electronics Minister Ashwini Vaishnav has revealed a new target for India's chip-making ambition. Says the country will match world leaders by 2032. 3 new chip facilities to start commercial production early next year. The government is stepping up its crackdown on dark patterns. 26 leading e-commerce companies including Zepto, Zomato, Swiggy, JioMart and Big Basket have self-declared that their platforms are free from these tricks. Minister Prahlad Joshi, in an exclusive conversation, has said more cases are being invested. Plunge in crude oil flows from Russia ahead of tomorrow's deadline by Donald Trump. Kepler data shows shipments to India have halved to 948,000 barrels per day so far in November from the last month. Experts say a complete halt is unlikely despite American threats. All right, straight away, let's look at how the stock markets are trading in the last half an hour of trade. Well, it's Thursday, and remember, it's the weekly expiry of Sensex contracts, and the markets are actually pretty buoyant in the trade today. After days of struggling, we are seeing an attempt yet again towards record high levels from the Nifty 26,180 odd levels. There's a 0.5% uptick, but you did see some pressure at the high point, and therefore we have ebbed a tad lower from that level. Nifty Bank continues to hover near record high levels, 59,325 right now, 0.2% higher in trade. However, when we look at the mid and the small caps, they have slightly slipped, from the day's high point there. Remember, in the last couple of weeks, we've also seen the mid cap index, hit record high levels, but you've seen a swift fall onto the mid cap stocks as well as the small cap stocks in trade today. They are both trading near the record low. They are day's low level at this point in time. When we look at the key stocks on your screens, Eicher Motors, Bajaj Finserv, Bajaj Finance, these two Bajaj twins, these are the top movers as far as the Nifty stocks are concerned. Also supporting the sentiments is big heavyweight Reliance Industries, Hero Moto. On the other hand, you have Asian Paints, Indices Bank, HCL Tech as some of those stocks that have slipped into trade. But let's welcome our guest on board. Ashu Madan, MD of JM Financial, is now joining in to share with us his fresh take on the markets. Warm welcome to you, Mr. Madan. Thank you so much for taking the time out. It's always good to speak to you. And finally, seems like, the bulls are throwing out the bears, at least for now. Will we succeed in hitting record high levels today or maybe in the coming days?
Yes, certainly. I think, Sakshi, in the coming days, yes. But today, probably you just mentioned one thing, that it is off highs. So everyone was waiting for this breakout, and I think this breakout has eluded us 7-8 times. Every time it flirted with 26,000 plus levels, we went down. But the good part was that we were not going below 25,800, which was giving a lot of comfort in the market that this 200-point correction, it's very normal, and probably it is only a matter of time. It could take 6 times, 7 times, 8 times, 10 times, or ultimately it has to go up. So today it has crossed. Yesterday only it has crossed 26,100. So we are in a sweet spot now. The only caveat is probably because for once everyone thinks that this is an excellent breakout and everyone will jump into it, and probably we'll see some correction because of that. But that is a very perfect market to buy at dip. So in the overall scheme of things, 26,100 has crossed, is a very good level. We are heading towards 27,000. Maybe some tariff news or something else, or maybe some short covering or buying by FIIs can take us before January, by January to 27,000 also. But having said that, Sakshi, very important thing is, which we have kept discussing over the last few fortnights, that the churn is very important because it is nifty. That is why we are recommending everyone to buy nifty ETFs if you can't buy anything, or churn. This time the sectoral performance, if you talk about IT, has surprised everyone. When everyone was feeling down and out about IT, and suddenly IT came in the forefront, and the Reliance is also performing, you just mentioned. So I think that is very important. If you look at still talk to most of the clients, and the portfolios are not showing 26,200 excitement, but Nifty is showing. So I would say still be with the large caps and frontliner and index.
Okay, be with the frontliners and be with the index at this point in time. The trend is Positive, and that's what we're going to be seeing at this point in time. But Ashuji, remember last time when we were talking, there was a rush of these IPOs that we were discussing, and today we are seeing some signs of a sell-off on some of the recently listed stocks like Grow and Physics Wala. What we have seen is that both these stocks, they climbed up, they saw huge subscriptions, and for the last couple of sessions, both these stocks are actually substantially down as well, and they have now to be a trap kind of a situation for all those investors who had invested in it, thinking that these potential IPOs will be giving them great opportunities for wealth creation. Grow for sure moved up. Those who were smart, they pulled out their money just when the company was near doubling their money from IPO times. But then last 2 days, it's actually turned out to be a sour grape. How are you looking at Grow and Physics Wala at this point?
See, Sakshi, generally when we talk to clients as a layman, my mantra is any IPO, which is highly oversubscribed and you don't get allotment at all, and it opens up with a muted response, is a buy. And where you get allotment is a sell. So that is the simple mantra for all the IPOs. Now, Grow, what happened? When it opened at 115, 120, we recommended all the clients to buy. Generally clients that one can buy a Grow stock. I'm just sharing a very interesting story. So 120, in just 48 hours, everyone booked profit at 140, 45 levels. And suddenly it went up. Like that. And it is still, today if you look at the price, it is still higher than the price which they sold in the next 48 hours of buying. So, you have to look at from that point of view, because you very interestingly mentioned Grow, because Grow is one stock where we are trading. We were recommending, and that is why I'm able to share this story, that 120 post-listing, not at 110, 120, everyone bought. And most of the clients, when we generally suggest, and by 140, 145, they were out. And they were cribbing next 48 hours that it has crossed 170. Yes. So I always say the regret of booking less profit is much better than regret of booking loss. Now somebody jumped on and bought at 170, 75 also because of some short covering factor. You can't chase this momentum forever. You have to be satisfied. It defies the logic at some times. So it is this short-term trading, Sakshi. By next week, when we'll be talking, Grow would be at a different level. This 2 days, sharp rise, sharp fall. All kind of speculative activity happens in the very short term. So you cannot catch that. It's very difficult to comment the short-term moment. But as I said, that Grow overall, if it comes to again 120, 25 levels, is a very good buy. One should hold on to this stock. I'm just... For example, we were talking about Lenskart also. Lenskart, everyone was circumspect. Not only circumspect, everyone was trolling, not just trolling Lenskart. They were trolling somebody who was recommending Lenskart also. So when I opened, my theory was same, Sakshi. Let's assume everyone has bought the wrong stock. Everyone has stuck at a IPO level. The price section says that you can sell it at your level. 5 rupees higher. So that clearly suggests that if somebody is absorbing, the price is good. The way we say Bhav Bhagwan in our language. Yes. So the price action says it all. When Lenskart, every post-IPO, all those were feeling bad, jittery or concerned, could sell that.
Absolutely.
So then Lenskart is a buy for me. So these are the disciplines which we follow, not just the valuation factor. Price action is very important.
Price action
that's
is
how
very important.
We are targeting this.
Absolutely. Meanwhile, viewers, you must note that Physics Wala shares, they've crashed 19% from day one peak, and 8,600 crore rupees has already been wiped out on Physics Wala. Grow shares have also fallen by 18% in just the last 2 trading sessions, and that is keeping the sentiments, pretty on the nerves at this point in time for investors who got these stocks in their allotment, and they are now finding out as to what should you be doing. You've clearly heard, Ashuji, as to what should your strategy be. Moving on, let's actually talk about what the government is doing. Government's recent crackdown on online dark patterns is now bearing fruit. At least 26 online brands have now declared self-compliance on the issue. These include giants like Flipkart, Zomato, Swiggy, Myntra, Make My Trip, JioMart, Tata 1mg, among others as well. In fact, Business Today Television spoke to Minister Prahlad Joshi about the steps being taken there. Let's listen in to what the minister had to say.
As far as dark pattern is concerned, we have told all the major companies, for the online companies, for the internal audit. They should, what are the dark patterns? We have given the guideline. Whether whatever actions they are doing, whatever the transaction they are doing, whether is there any dark pattern, they have to identify. And they have to submit that audit report to us. That was been made. And 26, I think companies, they have submitted, major 26 companies. And whenever new things come up, because it is a dynamic situation, every day new things will come up. Whenever it comes to our notice, we will talk to the concerned people and try to resolve that.
So do you believe there should be a framework, because this has been repetitive across the likes of Flipkart, Uber, Ola, etc. Should there be a framework for stricter action in your view?
No. For example, today if you say one particular thing as a dark pattern, we will address that. Tomorrow, something else, there cannot be a permanent framework. They will come out in a different way same issue, they may come out in a different way, or some different dark pattern may come up. So you can't make a permanent dark pattern, because market is a dynamic market. It is daily, there will be changes. Agar aaj particular company is running this taxi related business, means there are some companies online booking for the vehicles. Tomorrow another company may come, or tomorrow he may impose another condition which immediately you may not understand. It is they are trying, they are losing by paying extra. When somebody notices it, and if he gives a complaint in the CCPA through a helpline, then we will act. You can't permanently fix a framework, because that framework, then they will also, because people who are doing business, they are also intelligent. They will think in a different way and find other ways to do it. No?
All right, let me straight away go across to Aishwarya Patil, my colleague, who's spoken to the minister about these dark patterns to understand what these dark patterns truly are. And as consumers, if in case you are noticing certain of these patterns, come up in front of you, how do you identify them, and what are some of the steps that you could be taking in there? Aishwarya, go on, help us understand, how does an average person using these e-commerce platforms on an everyday basis, identify what's really happening there? What are these dark patterns? How do I really protect myself, as well as highlight wherever the issues are emerging?
Well, as you heard the minister, he said that dark patterns are dynamic, but as a user, if you kind of trace your digital footprint, you will see that it's omnipresent and sort of hidden in the garb of something that has been sold to you. 13 such dark patterns have been identified by the Union Consumer Affairs Ministry, and even the Union Minister has multiple times tweeted about this. Across platforms, e-commerce platforms, when you're making online bookings for holidays, flights, even online shopping, even quick commerce platforms, there are certain dark patterns that you can identify. So I'm just going to name a few of them and then explain. False urgency, basket sneaking, confirm shaming. These are just some of the dark patterns that you will notice. But false urgency, for instance, you will see a ticking clock around your flight ticket booking, where it says that you can only avail this flight ticket at 4,000 rupees. This is just one kind of a dark pattern. Another one, maybe you want to make a purchase for a pack of biscuits, but when you go to your cart, you see multiple other products or services being added, or a donation fee being added to your basket. That is one kind of dark pattern. Correct. It's called basket sneaking. So multiple such prompts which are unethical in a way, which pushes the consumer to make a purchase which is unsolicited in a way. So dark patterns, according to the Consumer Affairs Ministry, is unethical, and this action, these 26 companies that have prompted and sort of given out an audit report, this is based on that. So crackdown on some of these companies. That's the update so far.
Fantastic. Aishwarya, thanks a lot for getting us all of that update there. I hope this has truly enlightened some of our viewers who must be noticing these patterns without understanding what these dark patterns are. Going back across to our guest, Ashuji. Ashuji, of course, these new age companies, quick commerce companies are making our everyday lives easier. And we are seeing on an everyday basis, more and more of these companies make their presence, get listed. And we are also getting used to of using them for our own convenience. But at the same time, as our minister has also highlighted, our reporter also, you heard out that there are some issues that need to be constantly watched out for, on the same as well. But speaking as an investor, how are you looking at these new age tech basket companies?
So Sakshi, I just correct, we are not used to, we are addictive. I mean, we are addicted to them, and it has become a compulsion, it has become a way of life, it has become a construct of our lifestyle and living. So you hate them or, love them, but you can't avoid them. So that is where the regulators' role come into play, because I mean you can't avoid them. The user will use it. They have to use it. There is no other alternative. But the regulator and the government has to keep a tag and keep these checks and balances, which is very important. Otherwise, you know what has happened in the digital, either the kind of digital arrest and the digital fraud they're happening. So everything is changing, Sakshi. I mean that is why I always say that in this current swipe generation. The definition of long term will also change. I mean, long term will not the infinite and indefinite terms for the market also. So everything is changing. Our life will change. I mean, when everything is changing, how can the long term definition will remain what it was in 1980s and 90s or probably early 2000? So investments also, India has become a trading market. I always keep saying that, and people say that you can't time the market, but I say that's the skill you have to develop in the times to come.
Absolutely. That's a very important one and definitely calls for a deeper discussion that we can do at another time, Ashu. But definitely you've marked out a very important point for all our investors to keep in mind and viewers to keep in mind as well, that the definition for long-term perhaps in today's day and age has changed quite a lot. There are different ways of how you should look at investing and trading on a day-to-day basis vis-a-vis what used to happen 10 years or 20 years down the line as well. In fact, let's now look at another buzzing sector, and that's the semiconductor space as well, viewers. The semiconductor ambitions are racing ahead, with manufacturing now sprinting towards global benchmarks as well. Speaking at the Bloomberg New Economy Forum, IT Minister Ashwini Vaishnav has said India's chip capabilities could now stand shoulder to shoulder with global leaders by 2032, with several plants already nearing production. Let's listen into what he had to say.
We started on the semiconductor journey just about 3 years back. 3.5 years back. Today we already have an ecosystem developing just in 3.5 years, where production of chips is starting, design of some of the most complex chips is now happening in India, all the way up to 2 nanometers. I can say in case of semiconductors by 2031, 2032, in that time frame will be equivalent to what many of these countries are at today. And then it will be a race which will be a very fair and a level playing field. Similar things will happen in other technologies also. When we started the semiconductor mission in 22, there was a lot of skepticism at that point of time. But today we have 10 units which are under construction. 3 of the units have started pilot production. Actually, 3 will start commercial production going forward in the first quarter of next year. The progress is very, very fast.
All right, let's in fact go back to Ashuji to understand, how should investors be really looking at this opportunity that's going to be emerging fast enough for all our viewers to really look at. Ashuji, semiconductors being seen as a sunrise sector, our government is focusing a lot on it. We've already seen, the negative impacts of not having enough production back home and relying just on a singular or just about 1 or 2 sources of multiple, supply chains. And has happened to our auto industry for a large part. We've seen to our electronics industry how they have faced the shortage of semiconductors, and therefore we have seen the government stepping up the pedal on having our own chips there, because this industry is going to grow and grow massively. For investors, how are you looking at the current opportunity there? Do we have enough stocks to really choose from? How should one be really tapping it at an early stage?
Not really, Sakshi. That's the, flip side of it, because whether it is AI stocks or whether it is these data company stocks and the semiconductor, we don't have much scope to invest. That is where, the proxy, probably if you want to invest in a, sectoral theme, defense is something which is going to grow a lot, and that is where India is becoming more and more indigenous, and the way we are targeting exports and for self-reliance also, that is one sector which will do good, and probably some kind of proxy to that. And also otherwise, as I said, that if you're not able to participate really in a particular sector or for just go for the index. For this time also, when we felt that IT is going to perform, for me it was very difficult to identify whether, because TCS and Infi are large, there's a big correction has already happened, probably have become a safer stock. Otherwise, go for IT index. So right now, I think for most of the people, because what about
names like NetWeb?
Yeah, that's right. But let me complete what the thought which I was saying, that in its particular stock, there are chances for you going wrong or that stock underperforming or a sector underperforming. But overall, see, what is more frustrating about the market is the kind of euphoria and the celebration which we should be doing at 26,200. A lot of participants are not been able to do that. And not just directly because of the stocks, even indirectly through mutual funds also. If you look at mutual funds also, Sakshi, because the way they were under-owned on PSU banks and autos, then the way these two sectors have performed, a lot of mutual funds have not been able to perform the way markets have gone up. So that is why I think ETFs are the best way to go. They are the best proxy. I mean, just try to go for that particular sectoral ETF if you want. I mean, that's the best way for a normal investor who wants to play somewhat directly also and not through mutual fund or a quasi mutual fund and something direct. I think ETFs are the best proxy to play and participate in this market. Once you are convinced about the story, the India story or the sectoral story or probably the market, I think one must have a portfolio of ETFs.
Okay, must have a portfolio of ETFs. So for IT as well as defense, do you suggest ETFs are the best ways to go forward?
Yes, absolutely. I think for IT, though it has run up a lot, but I think till next quarter, these quarterly results, till January, one can do a short-term trading in ETFs, IT ETFs, defense. I mean, otherwise, Nifty ETFs. See, we have seen a bank Nifty breaking highs and the breakout has happened. Nifty, I mean, now the Nifty breakout is happening. So as I said, that everything goes well before budget in January, we might see 27,000 levels in Nifty. But if you start trying to identify stocks, maybe those 2 stocks or 3 stocks or that sector is underperforming, again, there will be frustration. So it is better that buy Nifty ETFs and buy every day.
And buy every day. All right, fantastic. That's a good way to go about it. You know, the Nifty is poised to move up higher. Ashuji believes that, 27,000 kind of levels could be coming in soon. But how do you go forward with it? Buy Nifty ETFs and buy them every day. Let's look at the market closing and we'll come back to Ashuji in a bit. 146 points higher. We are at 26,200 and probably looking to close in above that as well. The top moving sectors in trade today, definitely the financial services space, the infra space that's moved up. You had the oil and gas space that also moved up. Look at the Nifty Bank also holding up strong, about 0.2% higher. Of course, the fin services sectors, the NBFCs, they've moved up pretty much higher in comparison to the private banks or to the PSU banks today. But PSU banks had already been having a good run up over the last couple of sessions. You could also see autos that are driving up the show today. Although mid caps just managing to end in the green tick at this point in time, although the small caps, so it's a mixed trend on the broader markets front. Mid caps just trying to pull up from that lowest point of the day, about just flat 0.05% higher. Small caps on the other hand down by 0.06% in trade. Top movers on the Nifty: Eicher Motors, Bajaj Finance, Bajaj Finserv, Reliance Industries, Tech Mahindra. And on the downside, you have all those names like Asian Paints, HCL Tech, Titan, that's down in trade. Even Hindustan Unilever, and talk about Apollo Hospitals, that's still slipping in trade as of now. The final print on your screens, viewers, 26,193 as we close today's trading session as well. But let's go forward and now go back to our conversation with Ashuji to try to understand some of the stock queries that have come in from our viewers today. Our first question is from Ankit from Hisar. He says, markets are hitting new highs. So should I start booking my profits or should I participate more? Ashuji, what would you advise Ankit to do at this point in time on record high levels?
Yeah, it depends. Sakshi, exactly. I was saying, first of all, I must appreciate that Ankit is one of those who's getting profit on the portfolio. Otherwise, a lot of queries we received recently that portfolio mein maza nahi aa raha, Ashuji, even if the market has gone up. So I think I appreciate Ankit. Stock picking must have been fine, but staggered profit booking one can do. But I think if it is Nifty stock, it should hold for some time. I think the way things are panning out, I would say hold till January with the long positions. Though profit booking as a discipline is always good. I always say that profit in bank is the real profit. The notional is all stories and drishyam. But at the same time, if he's in the right sector and the stocks are good and they are performing in this market, then he should continue to hold.
Continue to hold. Next question is from Nena. She's from Jaipur and she says, where can I invest to take advantage of the wedding season? All right. So, of course, the wedding season is at its peak. This is a 45-day wedding season. In fact, I believe Nena should also have seen our own coverage on the entire wedding season, where we had done an entire understanding of how the economy is going to get boosted, which are the sectors that are buzzing there. But Ashuji, what would your suggestion be to Nena? What sectors to look at, where the benefits will accrue for the wedding season?
See, you already answered that, Sakshi. It will accrue to the entire economy, not a particular sector. I mean, most of the stuff which is involved in the wedding is, I mean, there are very few listed players or directly which get benefited out of wedding season. So I would say punt on economy, buy Nifty ETFs. Economy will do good, Nifty will do good, your ETFs will perform, and you'll be having, sleepful nights.
Okay.
And it is not for 45-day season, it is for a 365-day season.
It's actually become a 12-month period as far as the wedding season is concerned. Ashuji, last word from you on the Nifty. You did say 27,000 must be coming in. Will it happen before December 2025? And what are the levels that you would look at once those levels are hit? Are we going to be poised to go much higher in the new calendar year too?
Yes, Sakshi, I think 26,200 where we close. I mean, if this is crosses and it has technically crossed for me, as I said, 100 points dip from here will not make any difference, but only send signals that, to those weak hands, weak traders who feel that maybe we have bought at a higher level or at a highest level. This is a third, 9th-time rejection of that level or 10th-time rejection. But gradually, sooner or later, it is going to pass. So I can't say about December, but January, I think that post 26,200, January we'll see 27,000.
Fantastic. Thank you so much, Ashu, for being with us on the show. It's always a pleasure to be speaking with you and, of course, seeking all those insights on the markets. Good to have you with us. Hope you have a fantastic time.
Thank you, Sakshi. Thank you for having me.
All right, viewers, with that, it's a wrap on the Business Today show. And in case you too have any questions about your investments in mutual funds, in SIPs, your stocks or gold-related queries, then please do send them to us on the number that's flashing on your screens as well. And definitely tune in to the 9 a.m. show tomorrow morning for the market trading setup and the opening action with Abba Bakaya.